Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, May 25th, and I want to take just a brief minute to talk about markets last week as they continued to move higher, and this year with the S&P 500 finishing the week up 1.65% on the week. The mid-cap index was up 0.95% or 95 basis points on the week, and the small-cap index is measured by the S&P 600 was up 1.2%. So showing the resiliency of this market as we continue to climb a proverbial wall of worry. We still have looming out there whether we do or don't get a debt deal, and you've seen some volatility in the equity markets this week surrounding the fact that we still don't have that deal done. But overall, the market remains very strong and resilient. But if you were to turn on the news or the CNBC, read the Financial Times, most pundits continue to be very, very negative on the market. We're heading towards a recession, we're going towards a hard landing, market can't be where it can be, and investor sentiment, believe it or not, is at the lowest levels. Their investor exposure is at the lowest level since 2009. So people have left the market and are hiding in short-term treasuries and money funds, which is providing a decent return and is not a bad place to be if you don't like short-term volatility. However, at some point the market and the ship will right itself, and the economy is showing signs of slowing, which is what the Fed is trying to do with interest rates. We also know that we have a Fed meeting coming up in the next month, in the beginning of next month, and we're going to find out if they're going to raise or pause, and that's continuing to be another volatility factor into the marketplace. But again, even though, as we talked last week, that market leadership is very, very narrow right now, and it still remains that way, that's still moving higher on the backs of those few names. So what is encouraging about that is the lack of exposure that is, which means there's a lot of money sitting on the sidelines looking for an entry point to come into this market. And if we get some solutions and answers to some of these questions that are looming, whether it's the debt deal, whether the Fed continues to raise or pause, if inflation does in fact continue to come down, does that give investors the onus to go ahead and enter back into the equity markets? The other thing I wanted to mention is that people say, well, if we're heading towards a recession, how in the world can we believe that the equity markets can move higher? And remember that the equity markets are not going to always move in flux with the actual economic markets themselves. The equity markets are going to price out a proverbial recovery well before any recovery happens. I'll point you to 2009 when the stock market was up 26%. And the economy was still struggling in 2009. But it was pricing in the eventual recovery of the equity or of the economy that year. And so you see all of these opportunities, and so you turn on and you see all of this pessimism, and it just kind of makes you want to sit on the sidelines and not be in the market. And oh my gosh, if I'm in there, I must be the only one playing in the game. But I wanted to kind of give you some statistics dating back to 1926. What your chances are of getting a positive return in the equity markets. So you have a 56% chance of getting a positive return on a daily basis. You have a 63% chance of a positive return on a monthly basis, a 75% chance of a positive return on an annual basis, 88% chance of a positive return on a 5-year basis, 95% chance of a positive return 10 years from the day that you invest, and over 20 years you have a 100% chance of positive return. So what that means is your chances of having positive returns when you put money into the equity markets are greater than not. So betting against the market and trying to be timing it and doing things along those lines can cost you as the market moves higher and away from you. So I wanted to share some positive statistics about what your chances are of actually getting some positive returns in the equity markets. and would be happy to answer any questions you have about those or how that impacts you or your style. So give us a call. We'd love to talk to you. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Talk to you next week. Thanks.